In this video, I'm going to showcase an advanced version of the EMA indicator that is probably over 3 times better than the traditional EMA. We're going to go over what this indicator is, the best settings to use when trading, and we're also going to combine it with one extra technical analysis tool to craft a strategy just for you. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, go to TradingView, and then here you want to load any trading security that you like in any time frame. Then open the indicator search tab and type in EMA Difference Histogram. You want to select this one by Wu Gamlo. So what is this indicator? Well, the EMA Difference Histogram and Stochastic Indicator, as it's called, is a trading tool that combines the analysis of 2 exponential moving averages and the stochastic oscillator to provide clear signals for entering and exiting trades. The difference between the 2 EMAs, let's call them EMA 1 and EMA 2, is calculated and then plotted as a histogram. These histogram bars represent the magnitude of the difference between the 2 EMAs. The color of the bars changes to indicate whether the difference is increasing or decreasing. So let's add 2 EMAs and see how this indicator actually works. On our chart, I added 2 EMAs. Now, to know the exact periods of these 2 EMAs, we're going to have to access the settings of the EMA Difference Indicator. These are the lengths. We're going to change EMA 1 to 8, EMA 2 to 24. So let's come here, and the first EMA should have a length of 8. And then the second EMA should have a length of 24. You can also change the colors to make them a bit brighter. After that, click OK. Now, whenever the slow EMA is under the fast EMA, the histogram is going to be colored green, and vice versa for when the fast EMA is under the slow EMA. And as you can see here, whenever that happens, the histogram is going to be colored red. Also, as you can see here, whenever the difference between these 2 EMAs is increasing, basically whenever the gap between these 2 EMAs widens, this histogram is going to be increasing. As the EMA difference decreases, the histogram is going to change color to light green to indicate the reduction of the difference. The opposite of this is true for a red histogram. A bright color indicates that the EMA difference is increasing, but for a light red color, like here, it indicates that the EMA difference is decreasing. This actually gives us an idea of how this indicator can be used to trade. You basically want to take positions only in areas where the EMA difference is increasing, because that represents an increasing trend. For a bullish trend, for example here, a bright green color indicates an increase in the EMA difference, which further indicates that the bullish trend is getting stronger. These are areas where you want to be taking only long positions. Now, as soon as the EMA changes color to light green, that would be considered a pullback. It could also indicate signs of a trend reversal to the downside. Taking positions in these areas would be risky, but you can use these areas as signals for scaling out of your position. The opposite of this is true for short positions. Now, using this indicator with the default settings isn't recommended because it produces lots of false signals. So let's double click on it, and then on the inputs tab, we want to change EMA 1 length to 50 and the EMA 2 length to 100. On the style tab, we want to change color 1's opacity to 0%, as well as the opacity for color 2, reduce it to 0%. Disable the 2 stochastic options. After that, click OK. Also, we're not going to be needing these 2 EMAs, so let's delete them. And now we can add the extra indicator that we need to use in conjunction with this one to craft our strategy. On the indicator search tab, you want to type in purple cloud. And you want to select this one by Murad M82. Double click on it so we can change some settings. On the inputs tab, you want to change the period to 21. Change the alpha value to 3, change the buying and selling pressure threshold to 0.1. After that, click OK. Now, this is a super powerful buy and sell indicator that prints weak and strong buy and sell signals. An S label, like this, indicates a weak sell signal. However, this signal indicates a super strong sell signal, and these are the ones we're going to be using for our positions. A B label, on the other hand, indicates a weak buy signal. But if you want to look for a strong buy signal, then it's going to look something like this. Again, these are the ones we're going to be using for our positions. Now, the next thing that we want to do is go over the conditions for taking positions using this strategy. But before we do that, let's talk about the Forex broker called HenkerTrade. Now, I've been using HenkerTrade for quite some time. As you can see here, this is my live account on HenkerTrade's web trader platform. The reason why I think HenkerTrade is a great broker is because of their low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of us who love high leverage, well, HenkerTrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,000, they're going to give you a bonus of $3,000, giving you a total of $6,000 to trade with. To access the bonus as well as all the other perks, well, sign up to HenkerTrade using the link in the video description. Now, back to the video. So how do we take long positions using this strategy? Well, it's actually really simple. This is probably one of the simplest strategies I've ever encountered. To take a long position, you want a strong buy signal to be printed by the purple cloud indicator. A strong buy signal looks like this. Now, condition number 2 is at the time the long signal is printed, the histogram of the EMA Difference Indicator should be colored green to indicate that the bullish trend in the market is getting stronger and stronger every 15 minutes. Those two conditions were met on this candle, so we're going to take a long position here. The stop loss is going to be set just a few pips under the entry candle. The take profit should be set at 1.5 times the risk. Letting the trade run, and it was profitable. Now, to take a short position, we're going to do the opposite. We identify a strong sell signal that's been printed by the purple cloud indicator. Condition number 2 is at the time the short signal is printed, we need the histogram of the EMA Difference Indicator to be colored red to indicate that the bearish trend in the market is increasing every 15 minutes. All those conditions were met on this candle, so we're going to take a short position. The stop loss goes just a few pips above the entry candle, and the take profit is going to be set at 1.5 times the risk. Letting the trade run, and as you can see, it was profitable. Now go ahead and backtest this strategy to see how profitable it can be over a longer period of time. If you find ways to make it even better, be sure to let us know in the comment section below. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.